Hey guys, Q here from ayantitrading, and today we're going to be doing some technical analysis on Disney stock. This is the end of April here, April 30th. As I'm seeing on my date, I am losing track of days these days. But we are in April 30th today, and Disney stock closed at 137.25, down 1.47% or $2.05 from the opening yesterday, from yesterday's close, I'm sorry. And so let's go ahead and get started. Let's see a couple things that I want to point out right off the bat as I'm looking at the stock. I see that there's a huge influx of buy-in right at the end of day. That is usually a good sign for tomorrow. The stock has been channeling down, trying to make its way up now all day, and finally it's gotten a little bit of volume at the end of the day that can possibly push it up tomorrow. We are currently in the 1 minute candles, as you can see. If you're not familiar with candlesticks, just leave a comment below or message us on Instagram at ayantitrading, and we can hook you up with one of our day trading courses and show you how to get there. But this is a candlestick chart, and we're going off 1 minute candles for now. One thing I want to point out is although there's an influx of buying right at the end of the day, you can see that there's a long wick at the bottom of this candle. This long wick is very important because it gives you bullish pressure. So now you know that the bears tried to take the stock all the way down to looks like a low of 136.75. However, the bulls were able to push it back up before the day closed, and they pushed it right above the 20-day moving average, closing at, let's see, how much did this close at? 136.95. So it's definitely a green candle, a lot of bullish pressure right at the end of the day. One important thing that you always want to keep in mind that it's very important that you move in and out of the time zones. So don't stick to 1 minute candles. You want to switch back and forth as a day trader between 1 minute, 3 minute, 5 minutes, and so on and so forth. And so if we zoom out to a 5 minute candle, you can clearly see that the last 5 minutes of the day were actually red. The last 5 minutes closed closed below the previous 5 minutes. But you can still see that bullish pressure. As you can see, there's a long wick at the bottom, and they also pushed the stock to close right above the 20-day moving average. Now, if you're not familiar with moving average trading, moving averages help you and guide you along the stock's movement. I don't necessarily call them the best indicators because they are a lagging indicator, meaning that they show you what's happening after the fact. But as moving averages get closer to one another, right now we have the 9 and 20-day moving average, as they cross or get closer to crossing, usually it's a good indication that it's a good time to buy or a good time to sell, such as right here. This is a perfect example. Right away when I look at this example as a day trader, I first see this W pattern. This double bottom pattern is amazing to see because it's usually bullish. However, in this case it failed. It did not get enough traction. There was a crossover as this pattern happened because the 9-day and 20-day moving average met. With enough bullish pressure, the stock kept rising, holding above that 9-day moving average. Eventually, they crossed again. A little bit of consolidation happened, and then they crossed again, as you can see, as the 9-day moving average became a resistance line to the stock's move that can possibly go up. So now the stock is consolidating again. Is it going to go up? Is it going to go down? We can't really predict that. Everybody knows that's unpredictable in the market. However, all the signs, all the Disney news are showing that this is just a pullback. Now, Disney is doing fantastic. They're releasing their earnings in a couple weeks, and they just introduced their Disney Plus service. As you could see, their Disney Plus service has done a miracle for them in the past couple weeks. There was a huge jump that happened around April 12th, and from there on it's been rallying. But why is Disney stock that much today? Probably because of the fact that it's just having a pullback. No stock just shoots straight up. You're never going to see a stock just go straight up. A lot of times you're going to see stocks go up, pull back, go up, pull back. But you never know. I mean, the stock looks like right now maybe coming off of a cup and handle pattern. Let me go ahead and draw that out to see exactly what I'm looking at. So as you can see, the stock is bottoming out, and now it's creating some kind of movement this way, holding above a specific support zone. And so what we want to look for next is a channeling pattern in Disney. So right off the bat, if we take a look at Disney, we can probably draw some kind of channeling pattern in the previous month. You can see the stock. Let me actually go in a little bit further. See, again, this is why it's so important to mess around with the candlestick timing. That way you can draw something accordingly. Not really seeing too much, but possibly what could be happening with the stock is that it is channeling in between these 2 points right over here, waiting to make a breakout and make another high in the next couple weeks. I know investors are a little wary because of their earnings coming up, but Disney is a solid company. They are looking to acquire more more of the Hulu stake from Comcast, which is 30%. So that's another huge plus for them. So definitely keep an eye out on Disney. I really think it's going to go further. Now, the message in this video is not about the Disney stock. It's just about the different indicators and the different things that I look at personally when I'm looking at a chart. So I'm going to be removing the drawing tools that I just put up, and I'm going to show you the first thing that I'm seeing as I looked at the intraday movement of Disney on April 30th. Right away, I see that Disney had been climbing its way up through the day. It looked very promising on the outside perspective or at face value. However, when you look below the surface, and that's what indicators do, they look below the surface. If you pull up the RSI, I don't know if you're familiar with the RSI, but it's the Relative Strength Index. If you're not familiar, our day trading course is available now at ayantitrading.com. Go ahead and get educated. The best investment you can make is in yourself. So go ahead and do so. And subscribe to our channel, please, if you want to become a part of our blog posts. So subscribe and become a member on the website, and you can access all our blog posts. But anyways, back to this picture. Right off the bat, as Disney is making its way up, an amateur investor or an amateur day trader may be holding the stock thinking that it's still going to go up. However, if you're looking at the RSI, you can clearly see that there is a triple top forming. 1 top, 2 top, 3 top. Although the stock kept going up and making higher highs every time, when you look below the surface, the relative strength index was showing a weakness of a triple top. Everybody knows that a triple top is a bearish pattern. So that means the stock is going to hit the last point and it's actually going to go down. The fact that the RSI was also riding above 70 points, that is, also not a very good sign. And so that triple top pattern resulted in the stock moving, and it actually hit a double top on the actual stock, and it is now going down in a downward pattern. Now, before the end of the day, the stock actually went and made another higher high. What could have indicated that for you? Again, the RSI would do so, and that is because of a bullish divergence that occurred. What a divergence means is that the stock hits a level on the stock market, the actual chart, and then it hits another level. However, even though the second level is lower than the previous line, you can see that the RSI has a higher one on the second one. So you can see this was 136.75 and this was 136.57, so it was lower, but the RSI indicated a higher point. That is a bullish sign. When you see a bullish divergence, it can be vice versa. They can also be a bearish divergence, but when you see a bullish divergence, usually that's a good sign, and the stock is going to go in the other direction and continue doing so because many other people are looking at the RSI, considering it's one of the most popular indicators. So anyways, I hope this was helpful. I just wanted to do a brief video on a little bit of technical analysis. I feel like I haven't uploaded one of these in a while. So I hope you enjoyed this video. If you did, please subscribe and comment below. Visit our website, ayantitrading.com. You will have access to stocks, blogs, and day trading courses and options courses if you are interested in learning a little bit more about the stock market. Anyways, guys, you guys have a great night. It is nighttime in California, so have a great night or great day wherever you are, whatever time you're watching, and don't forget to subscribe. Thank you. Bye.